All right, Bulls and Bears, back BX4, Bolts of the Bus, back with another dose of economic reality, a financial slash economic news update. Thank you for coming back. This is going to be my first report for this month of August. Welcome to August, everybody. Of course, it's the second, it's not the first. I missed a video yesterday, so this is my welcome to August video. And we got a lot of things to get caught up on. We've got some major weakness coming into the markets right now. Now, as I record this, this is a couple hours before closing today, Friday, August 2nd. Happy Friday, by the way, to everybody that looks forward to the weekends like I do. I've been taking about a week off even before the weekend, so it's kind of been a weekend all week for me. Let's get into the markets, though. Big weakness. Could they pump these markets back up before the end of the day? Yes. Do I think there's going to be a crash before November in the stock market without something major? No. It's going to take, in my opinion, something major to derail this stock market. Why? Because it's mostly controlled. It's mostly controlled by the top 10%. All right. We've spoken here many times about how the top 10% own close to 90% of all stocks, right? So it's going to take something very big to spook the top 10%. Why? Because it's the top 10% that controls much of the economy, not all of it. Of course, the central bank is the key player here, and the consumer's ability to spend. So then you have the street corner banks that loan out money, giving people credit card limits that they can still go out and get in more debt, right? So there's a combination of different players that control the economy. We've got, of course, the central bank, the top 10%, the regular banks, Bank of America, Wells Fargo, Chase, etc., that allow consumers to keep spending. Because if consumers can keep spending, that's one of the bigger drivers of the economy right there. So that's why we've got to cover those bases, you know, as often as possible. Just kind of remind people of where this whole economy, economic growth, what you call economic growth, where all this is coming from, right? Why the housing bubble hasn't went bust. Because we can create endless amounts of money, folks. It all goes back to the system of money. I'd like to give you the big picture here. By the way, I don't think any other channel um, that I've seen talks about the source of the problem. They all report the news. This happened, that happened. This bank said this investor said that, this economic analysis said this. Here's the market today, here's the numbers. Of course, we've heard that a million times on a million different channels, but I haven't heard any other channel actually getting to the source of what's happening right now, the source of the inflation, the source of the economy, the phony numbers, right? And sure, here and there you hear bits and pieces, but I've never heard anyone else, put it all together. Not that I'm great, but I do want to give you the big picture. I want more people to be aware of this, and maybe my channel would be bigger if I didn't talk about these things. But anyways, I want to give you this information. I think it's the most important. Before we get into the jobs numbers, these are bad jobs numbers, folks. Unemployment ticked back up. We're going to talk about that here. But first, let's talk about more companies leaving California. The latest, Chevron relocating headquarters to Texas. It's always Texas, isn't it? Not always, but many times. I mean, I can't even count the number of businesses now and headquarters that have been relocated or are choosing to relocate from California to Texas. Chevron said it expects all corporate functions to migrate to Houston over the next 5 years. Just another in a long, long list of entertainers, companies, just regular small business people moving to Texas and different parts of the country, but out of California. So what's going to happen? People like me, they're going to want me to pay for. I live in California. They're going to want me to pay for this with, charging me more for everything, right? They're going to tax. Pretty soon, they're going to be taxing the miles that we drive. I mean, taxing the miles that we drive. That's what the word is, and that would be the last straw for me. Even though I've got kids in school, I've got relatives out here. I'm taking care of an elderly parent at my house. I'm taking care of an autistic kid at my house. Relocating for me would be tremendously life disruptive, but it gets to a point where you've got to just say enough is enough and you've got to leave the state. For me, it's going to be very difficult. So it's going to have to get really, really crazy. I mean, it's already crazy, but it's going to have to get really bad for me to leave California. Anyways, let's move on here because we've got a lot of news to get caught up on here today. Market's down, but again, it's not the close of the day, so I don't really want to quote some numbers here. But the job growth numbers, 144, no, it's even worse, 114,000 in July, much less than expected. Unemployment rose to 4.3%. Now, here's a headline, CNBC. That's not the full story, though. The full story is this number that's really, really bad, 114,000. The full story is we've got about 800,000 new unemployment filings in a month. and only 114,000 jobs. But it gets even worse. A lot of these are government jobs. A lot of these are people taking on second jobs. And a lot of these are just people that lost their jobs getting a new job. So it is horrible, folks. Non-farm payrolls grew by 144,000. There I go again. 114,000. It's so bad that I can't even get the number out. 114,000. I shouldn't laugh because some people watching might have, lost their job. Anyways, you can't try to please everybody. You can just support what you think. Below the downwardly revised 179,000 in June, and that's another thing. It keeps getting worse, folks. This 114,000, by the time they downward revise it next month, they're going to look back and say, oh, because of this and this, we had to downward revise it. This might drop under 100,000, folks. This is a disaster. This economy is crumbling very, very quickly. Also, at the same time, the unemployment rate edged higher to 4.3%. Folks, it's so much worse than that. We've got 100 plus, 100, there I go again. I almost said a too low number. And I got to be careful what I say here because I went back to watch one of my other videos and I said the wrong number. 100 plus million people, 100 million people out of the labor force. It's more than that now. It grew again. Healthcare again led the addition to the jobs, adding 55,000 to payrolls. Is that a good sign when healthcare is the number one jobs added category? Is that a good sign? You tell me. I don't think it's a good sign. I think that's a sign of a sickening population, a aging population. We know that the birth rate has plunged because people are so broke they're afraid to even start families now. We've got this childless by choice movement and stay single for life and what's that called, the MGTOW stuff. All this stuff, people are choosing not to have families. A lot of it's financial, folks. I think most of it's financial. I'd say that's the key. The financial fright of people saying, I can't even afford myself. I can't even afford my own meals and my own rent, my own utilities, insurance, etc. How am I going to afford a bunch of kids or a big family? Right? People are scared, folks. Not to get off the topic too much here, but the reason for healthcare being the number one added category for jobs, and again, I think it's sickening and aging population. Right? You let me know what you think about that down in comments here. Let's move on here. Correction territory for the NASDAQ. With the weak jobs numbers, the numbers that we just talked about. Also, Treasury yields are being suppressed, folks. This is huge, huge. To keep this housing market from imploding, we've got the 10-year bond yield out. And it's not just me saying this. Look at this headline here. Here's how Market Watch put it. Sinking Treasury yields signal growing jitters about everything ahead of Friday's jobs report. That's the report we just talked about. There were jitters out there. People know that this economic deterioration is being masked by phony numbers, false optimism, hopes of a rate cut. Why are we even talking about rate cuts when inflation's still high? Because they know that the economy is deteriorating very, very quickly, and they need a little bit of juice, and they need a little bit, even more so, they need confidence. Look at this here. Denny's raising prices here. Denny's, of course, everybody knows Denny's. Denny's customers fumes comparing the old $5.99 breakfast meal to prices of $17 for the same menu item. Folks, what's that? That's triple, right? Almost triple. Well, it's definitely more than double from $5.99 to $17. Is that all locations? I don't know. But I do know that when I look at these menu prices, I'm like, what? It's crazy. And they're telling us that inflation's in the 2 to 3% range, 4% at one point. It got up to 9% at one point. And then to mask it, they give us the year over year numbers. They don't tell you the cumulative numbers. So one, the number's phony. Two, they don't give you the total cumulative number. They just give you the year over year, making it look like prices are falling when prices are just going up, but less quickly than they were previously. So it's like inflation's cooling. In the meantime, people are getting further behind on their payments. They're getting further in debt. Cooling inflation is not making things easier, folks, regardless of what they tell you. We talked about that many times here. Let's talk about this here. Powell, Fed chair, says September interest rate cut could be on the table as inflation cools. There you have it right there. Inflation cooling could be on the table, folks. Rate cuts in this environment where housing unaffordability is at all-time highs. Right? It's the worst time ever. This is worse than the peak of the housing bubble as far as unaffordability, right? More people are priced out of the housing market today, yet they want to have prices go up even more. That's what rate cuts are for, right? They're for more people to be able to borrow money to buy more things. More people qualify for loans. More people qualify for mortgages. The debt becomes a little bit more manageable. Will it be noticeable though? A fraction of a percent rate cut? I don't know. But here's something else with the housing market. We have these suppressed rates. We have the 10% 10-year. I got to slow down here, folks. I get too excited about this stuff. We got the 10-year bond yield now plunging, folks, plunging. Take a look at this here. Actually, I won't bring it up, and I'll just read it to you here. The 10-year bond yield, 3.8%, folks. That is a plunge. And we told you this was going to happen, especially before November. They're going to bring this down. Look at this. I got to bring up a chart on this, actually. Look to the right side here. This is a plunge, folks. It went from 4.25 just about a week ago. This was July 22nd. Look at this plunge. Now, we've seen this happen before a couple times earlier in the year. The plunge goes back up, the plunge goes back up. Then we've been in a downtrend now since April. Lower lows, lower highs, folks. They're going to drive this thing down to maybe even sub 3%, folks. It's amazing when you look at it. It's amazing. But it's not surprising because we know they're going to try to keep this housing market propped up. One of the key drivers of the economy, along with the consumer. It's huge, folks. The real estate market in the U.S. is the hugest. It's probably one of the biggest areas of an economy in the world. Manufacturing contracts again, folks. The bad news just keeps pouring in. This is like a river of bad news here. Slump goes on. Manufacturing contracts for fourth month in a row. Consumers are pulling back. McDonald's had to cut their prices again because they tried to be greedy. They tried inflation on the menu prices. Customers pulled back. Customers balked at the prices. Folks, we've got home buying assistance programs in all 50 states. And if you look at all the different cities, it's thousands across the United States. City to offer assistance for qualified first-time home buyers. These are just ones out recently. Detroit down payment assistance program for home buyers. County programs. This is over in Arizona, Mesa County. Is it Mesa? Yeah, Arizona. Down payment assistance grants available for Minnesota farmers. Folks, it's just thousands. These are just ones that came out just in the past few days. Cities, states, counties, specialized programs for different groups, and like in this case, farmers. Tons of down payment assistance programs to keep this housing market inflated, to keep the bubble from busting. Folks, this is insane. What do you think about all these numbers today? We're going to wrap it up. Got some traveling I got to do, so you may see less of me, but please make sure you subscribe. It's a very important time to keep track of all this data. Follow the economy. Be ready for what's around the corner, this economic curve we're in right now. The straightaway is coming up here, and it's going to be wild, folks. What's going to happen is something massive going to bring these markets down. We've got World War III escalating. I mean, all these different conflicts. I can't even keep up with it. I'm not a global war analyst. But I can tell you that the news that I'm seeing, it's not good. Things are escalating, and the odds of a big black swan coming down and bringing these not just the markets, bringing the economy to its knees, it's big, folks. I'm thinking 2020 times 100 here with what we're seeing knocking on the door here. Please make sure you subscribe, everybody. Keep stacking. Bye for now. Big love. Keep stacking, everybody. Peace.